Alright, so welcome to my finance talk. This is the fourth video out of 5. In this video, I'm going to be sharing with you how I save $1,000 each month in the military. Okay, so I'm going to be sharing with you personally my method and how I approach this and how I did this as an E1, okay, which is the base of the base, right? So to put it into perspective of how important it is and how advantageous it's going to be for you, the younger you are, you start this process. So let's say you joined straight out of high school, you're 17, 18, or 19, you know, and so let's say you joined straight out of high school, you're 17, and you do your 6 years, right? Now you save $1,000 in 6 years. Now, coming out when you're 23 years young, you have $72,000 in the bank. At the same time, you have the Montgomery GI Bill, so school will be mostly fully or for the most part paid for. Now you have a lot of you have a lot of money in the bank, which gives you a lot of options in life, right? So having a lot of money in the bank, gives you options. You can either, for example, let's say you're a business major or a real estate major, for example. Now maybe you can buy a rental property, or maybe you want to pursue a career in acting or an actress, whatever. You want to move to Hollywood. You don't have to struggle financially, right? Or maybe it's arts, maybe it's, whatever you want to do, you have the option to do that. If you want to buy a house, put a down payment for your parents or, uncle or whatever, you have options to do that, right? It doesn't have to be 6 years, You can do it 18, do it 4 years. Now you have $48,000 and you're 22 years young. You still have the Montgomery GI Bill. So the younger you are, the more advantageous it is for you as a very good foundational start to your career, right? So the first thing that I want to share with you is, number one, drastically reduce your expenses. Okay, you want to drastically reduce your expenses. So, as you are ranking up in the military, you raise your income, right? At the same time, what you want to do in the beginning is cut your expenses. So, if you're 17, 18, or 19, for the most part, you should have next to no expense, assuming that you didn't purchase a car, assuming that, your parents maybe pay everything for you in terms of the cell phone bill, which for the most part, that's going to be the case. Now, if it is not, I would recommend figure out a way that you can minimize the expense, right? If you have to downgrade, if you need to, that's what I highly recommend. Live a little bit below your means, right? You really don't need the latest cell phone all the time, every single time it comes out, right? So, second thing is delete your debt, right? What is your net worth, okay? What you don't want to do is have $10,000 in your bank account at the same time have $10,000 in debt, right? That doesn't really do much. It cancels each other out, and you're making the minimum down payment on the expenses each month. No, just pay the whole thing. Get rid of the debt. Delete it so you don't have to worry about it. So moving forward, all you're doing is moving up in the ladder. You're thriving now, right? So you have to figure out your net worth. What is your net worth? That's the key word. Net worth is basically assets minus liabilities in accounting terms. So basically what I mean is your money versus the money you owe is going to determine your net worth. Okay, a lot of people say, I have shoes, I have, laptop. I'm not talking about that. Okay, what I'm talking about is money that you have in the bank, okay, versus the money that you owe. Just make it really, really easy, because, if you're trying to sell your Jordans and laptops and watches, and you're trying to liquidate it into actual cash, it takes a long time. It's a complicated process. You don't really want to measure that in your net worth. So just for basic and simple, easy to understand and easy to calculate terms, just do it by money. All right. So the next thing is, this is what I use. Okay. which is the E1 strategy. This is what I call the E1 strategy because I'm an E1. So after taxes, after everything that you pay, state tax or whatever, it comes right about $1,300, round up $1,300. Okay. Now the biggest thing that you have to do is to have self-discipline to not spend more than you earn. Okay, that is extremely important. Don't spend more than you earn. All right. So you see the 1,300. So what I want you to do, and the strategy that I take, is I take $1,000 away. Straight, right away, I take $1,000 away, put it into my savings account, and I don't worry about it. Right. So I have $300 remaining. And if you saw my yesterday's video, you would see, I have different rules that you can apply. You can either apply the 60-20-20, 60% to expenses, 60% to your personal use, 60% in savings. Or, you can switch it up to 80-10-10 or 70-20-10. Or, if you don't have any expenses, like I said before, you can do 50-50. 50% of $300 or $150 on your own personal use, and other $150, you can put on your savings account so you can expedite the process and the amount that you save, right? So, guys, this is all discipline. Okay, this is strictly discipline, self-control, making sure that just because you have money in the bank that you don't overspend. Just because you have money that you just don't spend. The biggest thing that having money, being financially not worrying about my finances has done for me is the fact that 3 years ago when I first started this financial journey, one of my goals in life was whenever I went to a restaurant, I didn't want to be the guy when I looked at the menu. For the most part, the first thing that people see when they open the menu of what food there is, they look at the price point. That's the first thing they see. I wanted to just look at the food. That's what I wanted. Some plain and nice and simple goal. Not having to worry about finances. So when I look at the menu, I can just eat whatever I want to eat on that day without having to worry about finances. Right? So that was a big motivator for me. Just a simple life. Nothing crazy, nothing too fancy. Just being able to do whatever I want to do without, going overboard, without going crazy. Just have a nice and simple life and being financially free, not having debt, saving a lot of money, giving you options, provides that kind of lifestyle. So when you are in the military, I highly recommend, the younger you are, the easier it is for you to be able to do this. If you are older, joining into the military, it's going to be difficult because, you might be married, you might have a dependent, you might have this or this, expenses, bills, different type of situation. But, same tips, same recommendation, same strategy still applies. Reduce your expenses, increase your income. Right? Eliminate your debt. At the same time, save as much money as you can. Take advantage of the opportunity that you have in front of you. All right? So, thanks for watching, and I hope you have a great day.